Welcome back. On today's video, we're going to talk about the stock market, the changes, the volatility, and what I'm watching. Now, of course, I've got to give you the obligatory disclaimer. This is not financial advice. I am not a financial advisor. I'm not your financial advisor. I'm just giving you information that I see and how I'm handling investments and just a little bit of perspective. So I've been through a bunch of market cycles in the last 20 years or so that I've been investing in the stock market. And anytime we go into periods of volatility like we are in right now, there's a war on, there's oil prices spiking, the economy appears to be slowing, finding a job is harder, and that'll be a different video that we do here in the near future. There's a lot of volatility, a lot of nervousness in general in the economy. And generally when I see this type of action, usually people freeze or they get out of the market. They just don't want anything to do with it. And from my investing experience, that has been the biggest mistake that most people have made. Because generally the advice in the stock market, and this is the high level advice, is to buy low, sell high. That's with anything. If you want to flip cars, you want to buy them low and sell them high. If you're flipping houses, you want to buy them at a low price point, you want to sell them when it's higher. Any of that is what makes sense. But in actual application, it's very, very hard to do. I remember when I was investing through the early 2000s, late 1990s. And that was when the dot-com bust happened, when all of these internet stocks were going straight up, and all of a sudden they went straight down. And a lot of people sold when they hit the bottom, got out of the stock market, and never got back in. And of course, they sold everything when it was the worst time possible to sell. So this starts with a foundation. Number one foundation is you have to buy good quality stocks. Stocks that make money, have the prospect to make money very shortly. Stocks that have the opportunity to grow or spin out good dividends. There's different investing strategies. But you want to buy those generally when they're on sale. So let me show you what I'm seeing right now in the market. Now I'm using the Google Chrome split screen feature right now, which is kind of cool. And on screen I've got the S&P 500 and the Dow Jones Industrial Index. And these are two indexes that show how different companies are doing. The Dow is the largest companies on the stock market, in the American stock market. The S&P 500 is the largest 500 companies. So 30 and 500. And if I look at the last 1 month trend, the Dow's down 5%, the S&P 500 is down almost 2%. If we go over to another tab, I've got the Russell 2000, and it's down 4.2% in the last month. The NASDAQ is actually barely up, according to this. And you'd have to start over here and come back over here. So when I'm looking at this type of a trend, this will make a lot of people nervous. This is something that people will say, well, gee, everything's going down. Should I get out because everything's going down? Now, my opinion, and I think it's backed by history, but I'm going to specify that this is my opinion, is that when everything's going down like this, unless the United States economy or the world economy completely fails, buying on the way down is actually not a bad thing. You don't want to put all your money in because there's no way we can time the market, but if you have money sitting on the sidelines, this may not be a bad time. Consult your own advice, consult your financial advisors, but this may not be a bad time to start dollar cost averaging in. Because again, if we're down 4% here, and generally in this type of a market, I'm going to be sticking more with S&P 500 or the Dow Jones or large cap companies that I know, that I've been watching for a while, that I have a good feeling for, or they've got a good history and I have a good feeling for, are they going to make money long term? And I'm watching this saying, well, if I'm off by 2% in the last month, I can also look back at 6 months and say, okay, well, see, this looks like it's a one-time thing. This may be a good time to dollar cost average in while things are on sale. Now, back to the point that I made, unless everything goes wrong in the world economy. Now, if everything goes wrong in the world economy, has that happened before? Yeah, it has. And could that be very bad for everyone? Yes. But if the world economy collapses, we're going to have a lot bigger problems, in my opinion, than what's happening with our investments. That'll come down to day-to-day living issues and companies falling apart and all of the stuff that probably won't happen, just to be candid. So here's what I would do in this type of a situation. Number one, you have to have money set aside. Number two, you're investing in high quality stocks. If you want to take a couple of speculations and you can afford to lose the money, sure, why not? But I would look at high quality funds that track the S&P or that track the Dow. And then I would also, though, look at individual stocks that are solid, that have good earnings. And one way that I do that is I look at a website called seekingalpha.com. It allows you to put together portfolios, watch lists, And on these watch lists, you can come up with companies that you may like, that you may have researched, and you should absolutely research. Check the earnings, check the consistency, make sure that they're in sectors that are going to do well. And this is just a list that I happen to have out here right now. These are not all companies that I'm invested in, but you could look at AMD. Advanced Micro Devices, they make computer chips. If we think that that is a good market to be in, if they've got a solid track record of earnings, that may be something you want to look at. Broadcom's another one. There are some specs in here. Billion to One is a drug company that's coming up with some great new markets. But again, as speculative companies, you have to understand that in rough economic times, they do a lot worse. CoreWeave, CRM, Salesforce.com. If we come over to this other tab, Apple, American Tower, they do communications towers, Amazon, Google, MasterCard, Facebook, Meta, all of these types of companies that when you look at them, you have to understand, do they have good earnings? And I'm not recommending any of these individual stocks, but if you have a good solid company with a good track record of earnings, with good leadership and consistency, when they are on sale, in my opinion, it may be worth taking a look at buying them and dollar cost averaging in, again, because we don't know when the market's going to go up and when it's going to turn right down. But if you're already buying it when it's down, that may be an opportunity to get it on sale. Hope this has been helpful. This is a very quick video. This is what I'm doing. This is how I'm watching things in the market right now. If this has been helpful, give us a like down below. If you'd like to see more content like this and a whole bunch of other things, consider subscribing to the channel. And if you know this once, or you know someone that this may help, consider sharing. Thanks for being here. We'll see you on the next one.